Let's talk to Clem Chambers from Investors Hub. Clem, very good morning to you.
Good morning, Nick.
Right, what's going on? Markets are a bit volatile. The S&P's flying around. Bitcoin above your key support level. Donald Trump in the headlines. China in the headlines. What's your take?
Donald Trump in the headlines, China in the headlines, world markets in the headlights. I think that's really the way to look at it. I mean, obviously, the trade war with China, between America and China, is the big thing, really. That is going to define whether we get interest rate cuts. It will define how quickly QT will end. Will it really end next month? It probably will now. It defines whether we're going to get QE, another lot of QE in due course. Because without doubt, the world economy is now, losing its momentum, has lost its momentum, is looking to dip into recession, a very gentle recession probably in comparison with past ones. But nonetheless, we are on the brink. And, you can see that everywhere you look, that QT pulled that money out of the system, and that system is now gasping for liquidity. And because of that, it's going to get it. It's just a matter of when. And people look at interest rates, but it's really not about interest rates. It's about availability of money, which is what QE is all about. So that is coming, and that should mean that sometime in the next few months, 3 or 4 months, we should get a lift off again in the equity markets. So that is, on paper, a very good, strong, bullish signal going forward, and that should kick off in the autumn and in the winter this year. Now, it's all well and good predicting those sort of things. There's a lot that can go wrong, and I think we're seeing that because uncertainty is very easy to measure. All you have to do is measure the volatility in the market. The more volatility, the more uncertainty you have. So when the market starts to thrash around, people don't really know what's going to happen next. And we're getting a fairly large element of that at the moment. Liquidity is starting to open up, and that's not a good sign, because uncertainty is pretty poisonous when it comes to markets, because really it's kind of the ugly sister of a bear market, because it is a sign of risk. And as we know, risk tends to mean there's danger. So this volatility says there's danger ahead. If it pans out right, it will mean that we get another bull market. But we will have to be on our toes here, because if it goes sour, then we're going to get a nasty correction. And we're still relatively at the top of that channel in the American markets that I've been talking about now for over a year. That sideways channel has actually turned out to be a little bit positive, a little bit upwards in that sideways channel. And we're still really relatively at the high of that. And until it hits the bottom of that channel, even short-term markets are really unpredictable. So we're still in the channel. It's still looking good. If interest rates fall and QE comes back in again, we'll break through that channel and we'll be off to the races again. If the China-America trade war goes very, very, very sour, then we will get a nasty correction. We will get a crash. And that's the market we're in. We're caught between a rock and a hard place, or the sea and the sand, and it's going to come out in the next few weeks whether we're going to go to the races again. I think there's a very good possibility that we're going to get some more QE, and that will be great for anybody with equities, whatever happens, really. So I think that's what's coming. I think we're going to get the end of QT next month, and then I think we're going to have a little pause, and then there'll be QE will appear in one form or another, and that will push the markets up. So we'll break out the top of this channel, but it's a channel. We can break out the bottom of the channel. A speculator and an investor has to watch what the market says, not hold to his theories. It has to trade what you see. And once we're out of this channel, it will go a long way in that direction, whether it's up or down. I think it will break out to the upside, but I'm always tend to be a little bit bullish.
On that note, Clem, we've run over time. That's Clem Chambers from Investors Hub. Thank you.
Thanks, Nick.